This is the Asia Trade. I'm Shery in Tokyo.
I'm Avril Hong in Singapore. Your top stories this hour. Asian stocks set to extend Wall Street declines after more heavy selling in software and crypto. Bitcoin wiping out all its gains of the second Trump presidency. Amazon's $200 billion plans for AI infrastructure spending biting into its earnings outlook and sinking the stock in late trade. Also ahead, the countdown to Japan's lower house election as Prime Minister Takaichi gambles on her strong approval ratings and a sales tax cut. And Thailand set to go to the polls too, with voters weary of political instability and stagnant growth.
We continue to watch the tech sector across Asia after that sell-off continued on the Wall Street session. We're looking at Nikkei futures to the downside right now after already 2 sessions of losses. And of course, it will all be about the Japanese elections over the weekend. We are now expecting to see potentially Prime Minister Takaichi winning a solid majority according to some polls. And we have already seen the focus on Japan's fiscal situation and the 30-year JGB auction, at least yesterday, showing solid demand, leading to JGBs to gain ground. We will continue to watch the earnings season unfolding here in Japan. We had some disappointing results weighing on the markets in the last session, but today we're watching Toyota, Tokyo Electron after the market close as well. We're also seeing from South Korea some of the latest numbers on trade. Their December current account surplus widening, their goods trade surplus also widening, both numbers above $18 billion. This at a time when we've heard from South Korea's trade minister that Seoul has conveyed to Washington that they're moving swiftly in order to really achieve those commitments to the U.S. on their trade deal last year, Avril.
Shery, overnight on the street, we saw yet more selling coming through in software and crypto as well, now below 65K. And in this risk retreat environment, value, small caps, they weren't spared either. We saw investors perhaps compounded by the worries in the U.S. jobs market, compounding those concerns about the AI valuations and taking a look at how that also moved into some of the havens. You saw on the short end, treasuries gained, and the dollar also caught a bit of a bid. So there's a lot to unpack. Let's break this all down with Bloomberg Intelligence Global Head of Technology Research, Mandeep Singh, Bloomberg M-Life strategist Brendan Fagan, and executive editor for crypto, stacy-marie Ishmael. Mandeep, let's start with you because we did get Amazon numbers, and it was a case of another day, another high-flying tech stock, showing that capex expenditure and being punished for it. How does it differ for Amazon, perhaps, given its cloud profitability is seen as a weak link?
Yeah, you're right. I think the capex number was expected to go up given what we saw from Google last night. And look, I think in the case of Amazon, you are seeing that margin headwind, whereas Google's cloud margins actually expanded from 17 to 30%. So from that perspective, you can see why Amazon is going big in terms of raising their capex, because they want to make sure they are the dominant cloud provider. But in terms of the workloads, I think Google definitely has an advantage that they have their own family of apps, and then they can allocate, the NVIDIA GPUs to external customers, whereas Amazon, it feels like they are relying mostly on their Trainium chips for driving that AI workload revenue, and the Trainium chips may not be as performant as the NVIDIA GPUs. So that may be causing that margin headwind, which we saw in the results.
And Brendan, given the skepticism right now about the AI build-out and how harshly these tech giants are being punished after results, is it a bit more concerning that the sell-off seems to be broadening right now, especially when you're talking about some private names like Ares, for example, that has this sort of exposure in the private sector as well with their investments on AI bets?
Absolutely. There have been concerns for weeks now permeating out of the private space about funding risks and what's going on behind the curtain of private credit. But today was the first real worrying day. If you looked at the price action earlier in the week, there were green shoots, whether you said it was an equal weight being up on the day or value or small caps holding in. Today was the first day where you can sit here and say there was nowhere to hide. So today's action is very uncomfortable. If I wanted to say there was a green shoot from today, it's that the S&P 500 did hold the 100-day moving average. So that's one thing to point to. But overall, today was pretty dark.
Stacy-Marie, it was uncomfortable for crypto investors as well. Bitcoin keeps falling. We're seeing it past some of these oversold levels. Capitulation is a word that's being tossed around. What is your sense, though, of whether the selling is really over?
We're not seeing significant signs of the selling being over. I mean, just because of the way that Bitcoin trades, if you were to look at it in a Bloomberg terminal right now, you'd be like, oh, it's up, kind of, but that's just because of when the market closes and opens. I mean, to Brendan's point, we had a day where we were down 14%, and the acceleration was such that we're seeing a lot of people get liquidated, a lot of positions are getting closed out, and what that is doing is for even what are sometimes called the true believers are kind of having a hard time. Even if they still believe, they're just no longer profitable to an extent that makes sense for them to continue to be in the market. So we're looking at a few different things. We're going to be really closely paying attention, not just to Bitcoin, not just to Ether, but the state of the altcoin market. So the smaller tokens, the meme coins, because that's really a place where a lot of the speculative frenzy has been concentrated. We're going to keep a close eye on what's happening to crypto ETFs. Are people, selling those? Are they pulling their money out of those? And of course, we're going to keep a close eye on the earnings of companies like Strategy, like Coinbase, and others to try to get a sense of what they're going to be projecting for the weeks and months ahead.
Stacy-Marie, what has fundamentally changed for the crypto space, especially after the liquidation event in October that's leading to this really long-standing downtrend?
I think one of the things that's happened is nothing, right? Like there was a lot of expectation that by now we would have a second important piece of legislation in the United States that would, set up some governance around market structure that has pretty important potential consequences for things like stablecoins. There hasn't been affirmative rhetoric coming out of the White House, whether it's from the Treasury side or President Trump himself. No one is kind of saying, hey, we're going to buy Bitcoin or we're supporting, the digital asset industry. So it's not the same narrative from the top down as there were where we were hearing a few months ago. And instead, what you're getting is just more competition for the same type of retail money, right? We're really seeing the rise of the prediction marketplaces like Kalshi and Polymarket kind of coming in and saying, hey, if you want to speculate, if you want to take a position on something, you can do it over here instead of using the crypto market for that.
Speaking of competition, Moody, we are seeing these software makers getting hit this week. Anthropic's rolling out another release, this time for financial research. I mean, how much of a challenge does this all provide to some of these software makers?
I mean, right now, I think the market is treating all of these product releases, as really a big headwind for pretty much every software category. We think, probably infrastructure categories like cybersecurity are completely insulated, even though Anthropic has talked about launching a cybersecurity offering as well. And that's where, the data that Anthropic has will matter in terms of the products that they're releasing. I mean, cybersecurity, for example, requires a lot of system log data. I don't think you can replicate that sort of data, unless they acquire somebody or partner with somebody. So from that perspective, there is clearly an overreaction that you're seeing in the market, because every software company is being treated the same way right now in terms of multiple compression. And that clearly will clear out over time.
Brendan, to Mandeep's point, it almost looks like babies are being thrown out with the bathwater at this point. Where are investors going to hedge?
Well, funny enough, we talked so much last year about how poorly the dollar did, but it's been doing well over the last couple of weeks. Dollar index is up about 2.5% off the lows coming off of President Trump's comments about the dollar doing well, which ironically marked the low. So it seems like a capitulation actually turn the market higher there. And that could be the case in crypto, but it's hard to say that you want to step in and catch a falling knife. But oftentimes you need to see a market capitulate before you step in. So we've seen a bounce in the dollar over the recent weeks. Today was a massive day for treasuries. So you're looking at your typical safe haven flows stepping in here.
How durable, Brendan, would you say the bounce in the dollar is, given what we're seeing on the pound as well?
I think it's interesting in the FX space because the big theme here is central bank divergence. You saw the RBA go just this week. You're seeing the BOE with a split vote, which was a surprise, hinting at easing probably sooner than everybody thought. ECB on hold. And then the interesting one today was BOC Governor Tiff Macklem, sounding a little bit more hawkish than everybody would have expected. So the theme here in FX is certainly central bank divergence, and the way that basket is constructed. If you get pound underperformance, you see the yen weakness that's going on. That can play into some dollar strength, and this rally can keep going. But ultimately, we need to know what Kevin Warsh is going to say. We just don't know when he's going to speak.
Mandeep, when it comes to the tech sector, what could be the next catalyst? We're still awaiting NVIDIA results at this point.
Yeah, if there's one thing we can be certain about is that all of these accelerator companies, memory companies have demand that is off the charts. In fact, NVIDIA CEO kept saying, demand is like literally taken off this year at CES and then at Davos. And so it's coming to fruition in terms of, what we are seeing from these companies. And given the capex increases that we are seeing for 2026, I mean, there's no doubt that these companies, NVIDIA, Broadcom, they're going to print great numbers. And, the supply shortages that we have heard are probably going to intensify, at least for the near term.
Stacey, this is all coming at the time where we are seeing more U.S. firms announcing a deluge of job cuts. And that seems to be coming through in the crypto space to some extent as well.
Yes, I mean, we haven't yet seen crypto firms in the US lay off, big numbers of people. Definitely nothing like what we've seen at Amazon and other tech companies. But just today we had, the company that trades under Gemini Spaceship, owned by now publicly traded company, but founded by the Winklevoss twins, say that they're essentially cutting all of their operations internationally and citing increased operational complexity. If these kinds of prices persist, however, if we start to get, below 60 into 55, 50, we fully expect that other companies will announce similar cost-cutting measures. There was a lot of hiring and enthusiasm going into the second Trump presidency on the expectation that prices would be higher than where they are right now. And when we've seen that in the past, retrenchment is almost inevitable.
Team, it's been great to get your analysis. Thank you. Bloomberg MLive strategist Brendan Fagan, Bloomberg Intelligence Global Head Technology of Research Mandeep Singh, and Executive Editor for Crypto Stacy-Marie Ishmael. Coming up on the Asia Trade, we preview Sunday's Japanese election with a ruling party lawmaker and assess the potential market and economic impacts of the vote with JPMorgan Securities and Fitch Ratings. Much more ahead. This is Bloomberg.
Japan heads to the polls on Sunday for a snap election that could reshape the nation's political balance. Voters will decide all 465 seats in the lower house, and the outcome will set the course for the ruling coalition's economic and diplomatic ambitions. Let's bring in our economy and government reporter Yoshiaki Nohara. Yoshi, so give us some insight onto how these polls look and how significant this vote could be, given that so much is at stake, including foreign policy, with Takaichi's expected visit to the U.S. soon.
Right. So polls are pretty much showing the, predicting the decisive victory for Prime Minister Takaichi's ruling coalition. So that means that if that becomes true, she's going to get a pretty good mandate from the public to pursue what people say to be a more assertive Japan on the diplomatic front and defense front, and probably on the economic front, more spending and aggressive fiscal policies with the fiscal balance in mind. So there's a lot at stake for the public and also as a nation as a whole, because as you mentioned that President Trump just mentioned that he's expecting to host Prime Minister Takaichi in mid-March, and that's going to be, a kind of a combination of the showing how the the win would mean on the diplomatic front with the U.S., which is the most important ally for Japan on the defense front. But at home, there's complication to the election as well, because you see it's a different dynamics in this election. So that means that there's a risk factor for Takaichi as well, still remained to be seen.
Yeah, that meeting with President Trump expected to be March 19th. But tell us a little bit more about the changed dynamics domestically that really raised the risks for Takaichi.
So one of the reasons why Prime Minister Takaichi called for this snap election was she wanted to see if the public feels okay with the new coalition. And new coalition is made by the hard-ruling Liberal Democratic Party and the party called Japan Innovation Party. But that means that the old coalition is gone with Komeito. So the wild card here is how the Komeito voters will cast their votes. If they decide to just entirely switch their votes to the opposition party, which they just formed with the biggest opposition party. So that could be a big swing factor in this election. So we never know what's going to happen.
Yoshi, externally, Japan, of course, faces pressure from China. How much support do you think Takaichi might be seeking from Trump when they meet?
So, Avril, so that's a really good thing to keep thinking at this point. Remember that President Trump is going to Beijing to meet Xi Jinping in April, probably. So that means that from his standpoint, he wants to signal that he's aligned with Japan, which is the strongest ally in Asia Pacific. But at the same time, from Takaichi's standpoint, she wants to make sure that she's got strong backing from the public. And if history shows that when Japan has a strong leader with a strong backing from the public, China may change its stance toward its leader. If you know what happened with late Prime Minister Shinzo Abe, when he won big, returned to power with a big mandate, then it was a signaling the start of seeking off-ramp between the diplomatic dispute that Japan had with China back then.
Yoshi, thank you so much. Always great to get your insights. Bloomberg economy and government reporter Yoshiaki Nohara. Now let's take a look at how markets are faring, particularly commodities, as some of the Iran worries ease off a little ahead of talks. We are seeing, in terms of oil prices, that continued decline. Saudi Arabia is also cutting some of the key oil prices for its Asian buyers. So the focus does seem to be on this global supply glut of the commodity. Some other top global headlines we're following as well. The Cuban government says it's willing to negotiate with the U.S. as it prepares for acute fuel shortages due to increased pressure from Washington. President Trump last month cut off Cuba's fuel supply from Venezuela after the capture of Nicolas Maduro. He also threatened other countries with tariffs if they come to Cuba's aid with energy shipments. Bloomberg has learned that China is asking state firms to pause talks on new projects in Panama. It comes after the top Panamanian court voided C.K. Hutchison's contract to operate 2 ports along its strategic canal. Sources say China has also asked shipping companies to consider rerouting cargo through other ports. Moody's Ratings has lowered its outlook on Indonesia's credit rating from stable to negative, citing concerns over policy stability under President Prabowo Subianto. This means the country's Baa2 rating could be downgraded if the government doesn't take steps to address fiscal pressures and a weakening in foreign reserves. The move comes days after a massive sell-off in the country's stock market over investability concerns. We have more ahead on the Asia trade. This is Bloomberg.
ARM shares rebounded after Wall Street analysts praised the chip designer's latest quarterly report, which initially drew a tepid response from investors. CEO Rene Haas told us their data center business is accelerating faster than expected.
We have a line of sight that says we see it coming. And it's probably coming sooner than we had thought. And the reason for that is the data center growth. But if you click below that, why is data center growing so rapidly? It is the presence of ARM CPUs in the data center. We're now over 50% market share at the hyperscalers. Secondly, the CPUs that are being used are using more ARM CPUs inside the chip. 192 cores, for example, inside a Graviton chip, going from 96. NVIDIA Vera going from 72 cores on Grace now to 88. So what does that mean? That means more cores means more royalties and high growth rate. Well, why are there more cores? When you think about agentic AI and everything associated with agents moving workloads across systems, managing workflows, et cetera, that's the kind of work only CPUs can do. So to your question, while we're not giving a date, we can see it, and it's coming sooner than we had thought, even probably 6 to 9 months ago.
And probably on the back of when you look at an Alphabet increasing its capital expenditure by another, well, potentially $185 billion, Rene. Is the AI bubble, this worry about AI infrastructure build out, a thing of the past to you, or there are still some bottleneck issues that you're concerned about?
Yeah, so it's a great observation, Caroline. And yes, there's huge growth in Google's capex. Not all of that $180 billion is coming to us, of course. But what does that say? We continue to see investments in the data center, whether it's what Meta had announced or Microsoft announced, and now Google, Alphabet, that exceed what people had originally thought was even possible, even a couple years ago. If you go back to when we announced the Stargate initiative in January of 2024, $500 billion over a number of years, people looked at those numbers and said, how is that even possible? Now 18 months later, it looks quite credible. So bottom line is, we are seeing such an investment because the AI opportunity, the way I like to think about it, is kind of the final frontier relative to technology. When you think about what could be beyond AI, it's really hard to imagine. So also the fact that AI has really had very little penetration, let's say into large enterprise or into our health systems or things around drug discovery. So there's a long runway. I think people are a little nervous about it, as decidedly so, because we've just not seen it before, right? We've not seen the order of magnitude we're talking about. So it's somewhat natural for you to look at it and say, well, gravity's got to hit it sometime. But then if you intellectually look at it and say, my gosh, is AI going to be something that will change and transform how everything is done? Well, of course. And then there's going to be investment to support that. And that's what we're seeing.
CEO Rene Haas speaking to Bloomberg's Caroline High. Let's take a look at how U.S. assets are faring as well. Following that tech rout, futures are pointing to further declines. There is that bid for havens underway as we see continued deterioration in the U.S. labor market. This chart also shows you that we are seeing this jump in jobless claims, slide in job openings, a surge in job cut announcements, driving that demand for safe havens in a way. This is Bloomberg.
Take a look at how Japanese assets are setting up for the market opens in less than half an hour. We're seeing the Japanese yen holding steady at that 156 level, very close to 157, and really headed towards that 160 level that has been seen by many as potentially an intervention level by authorities. And you can see Nikkei futures pointing to the downside. We had some negative sentiment coming from the earnings season, but also, of course, we're watching that tech sell-off in the U.S. JGBs actually gained in the previous session. We had a solid 30-year auction. But of course, all eyes right now on the fiscal picture for Japan as we're headed towards an election. Actually, take a look at what's at stake for Japan and Prime Minister Takaichi in Sunday's vote.
Just 3 months into the job, Prime Minister Sanai Takaichi dissolved Japan's lower house, calling a fresh vote for February 8th. Coming from a string of election setbacks for the ruling Liberal Democratic Party, Takaichi is aiming to capitalize on high public support and increase her majority in the more powerful lower house. Some recent polls show an approval rating of more than 60%.
I think Takaichi is really in an extremely enviable position. I mean, her support rates have been consistently extremely high, and I think that's going to do quite a lot for her in this election.
A stronger mandate would make it easier for Takaichi to push through her agenda, including higher defense spending and the largest supplemental budget since the pandemic. But the road to victory might not be straightforward. The LDP's alliance with Komeito fractured last year, ending a 26-year political partnership. The realignment injects new uncertainty into Japan's electoral dynamics. Voters, though, are more focused on the cost of living. Inflation has stayed above the Bank of Japan's 2% target for more than 3 years, while wages lag and a weak yen pushes up import cost, giving a sense of falling living standards. To ease the pressure, Takaichi pledged to suspend the 8% sales tax on food for 2 years.
Maybe it's because of the weather, but the price of vegetables, some are just shocking, aren't they? Even things like snacks and chocolate, their prices haven't doubled yet, but they've suddenly gone up quite a bit. Same with rice.
I wish they stopped just talking about tax cuts or eliminating the consumption tax during the election season and actually put realistic measures into practice.
The stakes are high. An increased majority would give Takaichi a green light to pursue what supporters call a more assertive Japan, with higher defense spending and state-led investment. But a loss of seats would be a self-inflicted wound for the new prime minister, who has said she would step down as party leader if that happens. Even before ballots are cast, markets are reacting. The yen has wavered and the government bond yields have risen, reflecting investor unease over Japan's fiscal path.
Since October of last year, we have taken a very responsible approach to public finance, talking about responsible, sustainable, and proactive fiscal policies. We are not talking about expansionary fiscal policies. And this is demonstrated by some of the numbers that we see. So I asked the market participants to calm down.
Japanese stocks have already outperformed many of their peers as investors focus on the so-called Takaichi trade. Ariel Buzetto, Bloomberg, Tokyo.
Let's get more perspective on the upcoming elections here in Japan. Arfiya is a member of the ruling LDP, serving as the Parliamentary Vice Minister for Foreign Affairs. She is the first Japanese lawmaker of Uyghur and Uzbek descent and previously had roles at the Bank of Japan and the UN Secretariat. She joins us now. Thank you so much for making the time during your busy election schedule. I know that you've been speaking to all of your constituents. What's important for Japanese voters right now as they head to the polls? And is the LDP doing enough to address those concerns?
Thank you. Thanks for having me. It's right in the middle of election season. I'm on my smartphone, so I apologize for the screen. But I'm going around my constituency, and what they are concerned about: economic sustainability. They're concerned about rising cost of living, inflation, but they're also concerned about Japan's role in the world. I think Prime Minister Takaichi coming to her position and leading our country as the first female prime minister of Japan, I think has inspired so many people. And her approach to diplomacy, her successes in her high-level diplomacy has really inspired the Japanese people. And they're just as interested in our approach to diplomacy, national security, as they are in economics as well.
And of course, you have a lot of insight on the state of diplomatic relations, especially within the Foreign Affairs Ministry, but also as you grew up in China as well. Tensions between China and Japan have risen recently. How do you expect that relationship to unfold under a new mandate by Prime Minister Takaichi?
I expect her to... Well, if she is reelected, that means that there is a democratic will to support her continued stance on her policies, We don't expect that to change. And I think that is one of the main topics of this election, is that we are asking the Japanese people what they see as the most favorable diplomatic and foreign policy. As regards China, Japan's policy on China has not changed. I think we have remained steadfast in our diplomatic relations with China. And we are asking our constituents whether that is what they would like to see or something else.
How is Japan looking at the Trump-Xi meeting that is expected for April in Beijing?
How is Japan seeing, excuse me? Sorry.
How is Japan looking at this upcoming meeting between the leaders of China and the U.S. that is set for, a couple of months from now? How do you think they view the U.S.-China relationship at this stage?
In my role as Vice Minister of Foreign Affairs, I'm not going to get ahead of making assumptions about how we see other countries and their relations. But again, our foreign policy remains the same. The United States remains a very important ally to us, and we maintain a communication channel with China as we always have been. And it is, I think, important that all of our partners around the world and different countries around the world, especially countries like China and the U.S., continue their diplomatic conversation. And we, remain keen on observing how that conversation will unfold.
Is Japan looking for perhaps more support from the U.S.?
More support from the U.S. in our relations with China?
In general, as there's more pressure with Beijing, does that also mean that when Trump and Takaichi are set to meet, maybe some commitments and reassurances on these long-standing allies might be required?
Again, I'm not going to get ahead of myself on making statements on behalf of the government. But again, our government stance remains the same. We remain in alliance with partner countries, including the United States, who believe in the values of human rights, democracy, and the rule of law. That does not change for Japan. And we trust that our partners, including the United States, continue to be in alliance with us in defending these values. And Japan, of course, has every right to speak about its own national security, and we remain steadfast in our right in protecting our right to do so.
Arfiya, Prime Minister Takaichi has been immensely popular within Japan, especially among young voters. Do you expect that to translate into actual votes for the Liberal Democratic Party at a time when, of course, the party itself has suffered from a lot of different scandals and also controversy as well in the past? Can the ruling party leave all of that behind?
That's a very good question, Shery. My sense going around my constituency is that we are more popular amongst young voters than we have ever been. I do hope that they do turn out to vote. I am in the middle of election season, so I do hope that it does reflect into our elections results. But in general, not just because we would like to win, for example, but I think it's important that every single person in Japan is involved in democracy, and it's especially important that our youth showcase their own opinions, whether they support us or not, in the polls. And so what I'm doing in my own constituency, which is urban, is to really encourage young people, whether they support us or not, to show up to the polls and to have their voice be heard, because we are talking about policies that will affect them the most. We're talking about policies that will have impact for 2 decades, 3 decades, 4 decades to come in Parliament. And I think Prime Minister Takaichi's popularity has really symbolized that to young people. I think they are now more interested in politics. They are now more aware that choices we make in choosing our leaders actually have significant impact on how we are seen in the world, how we see ourselves, how we may be able to see ourselves in our own leaders. This is true for girls growing up in Japan, a young woman in Japan as well. And I hope that that sense of inspiration that they have gotten from Prime Minister Takaichi will inspire them to go to vote, whether they vote for us or not.
Arfiya, a lot of the policies that are being talked about right now, of course, will have a significant impact on young people, given that we're also talking about temporary suspensions of taxes for food, for example, which will mean a bigger debt burden for future generations. At a time when the yen is so weak that households are having a hard time as well. Is the current government doing enough to really deal with these issues?
Thank you, Shery. I stand the same. I echo the statement that you just quoted from our finance minister, that we are not advocating for an expansionist fiscal policy. We are looking at responsible and sustainable, proactive financial policy that will respond to the rise of living, the rising cost of living and inflation here in Japan. Hopefully, this policy will succeed and we will not have to do it for long. But I think that's what we mean by sustainable, in that we are looking at what the government might be able to do to help the Japanese people in a steadfast and quick manner when they need it the most. But also what we might be able to do in the midterm and long term to really observe the markets, to see in each opportunity what might be the best financial and fiscal policy for Japan. And that's something that these are decisions we have to make, as time goes. We can't predict how our economy or how our financial status might be in 10 to 20 years. But what we can do is to respond to the rising cost of living right now, and to make sure and to promise to our people that we remain responsible in making sure that these policies are also sustainable.
Arfiya, we'll leave it there for today. Thank you again for taking the time amid your busy schedule. Arfiya Eri is Japanese Parliamentary Vice Minister for Foreign Affairs. Now, markets are closely watching this election as well. Investors have largely priced in a win for Japan's ruling coalition, but some are still bracing for possible surprises. Let's bring in our chief correspondent for Asia FX and Rates, Ruth Carson. So, Ruth, among the moves that we're watching in the markets, dollar-yen has been creeping higher. What are currency traders signaling?
It's interesting to see how dollar-yen has moved in the space of even just over a week. Remember that rate check incident a couple of Fridays ago? 152. We're now 5 big yen figures away from that. What does it signal? It signals increasing unease. Despite the line in the sand that a lot of investors see at 160 per dollar, investors are happy to test dollar-yen to go higher because a lot of what they perceive to be Japan's problems have not gone away. Expansionary policy is one. Obviously, there's questions around sustainability when it comes to debt as well. And, of course, the perpetual question of interest rates. Is the BOJ raising interest rates quickly enough to stymie, the dollar-yen from going up higher and quicker? The verdict at the moment is no. And which is why we're seeing the yen continue to be under pressure going into the elections this weekend.
Does that also mean that the concern surrounding the buyer's strike in JGBs is not fully in the rearview mirror, despite the 30-year auction going relatively smoothly?
Yes, it was a very good result yesterday overall. Did it calm fears? Yes. Is it going to be a permanent fix? Perhaps more of a Band-Aid. Because a lot of the problems, as I mentioned before, when it comes to fiscal sustainability, question marks around debt, for instance, still lingers. Remember, Japan is the most indebted nation when it comes to, the G7, the major economies out there. And this would definitely be weighing on all bond investors' minds, including the vigilantes that might look for opportunity to short to make money.
And you see how all of this concern is really expressed in the FX space, right? Because even though we had a huge risk-off plunge in the overnight session the last couple of days, the yen is barely budging. In fact, the dollar, which has been weaker recently, is now gaining ground again. What does this mean for the Japanese currency?
It's a great question because for years we've always looked at the yen as a hedge. When things go pear-shaped in the global economy or if there's a risk off, you buy yen, you buy treasuries. But dollar yen's around 157, incredibly expensive levels for dollar yen. If we use the FXFM function, for instance, on the terminal, we can see that option traders are pricing in close to a 60% chance that the yen will weaken to the 160 per dollar level by the end of March. So again, it shows you how the world's third most traded currency, the yen, continues to be under pressure. And as investors debate the haven quality of it, we can definitely see it being eroded or priced into the yen.
Ruth, thank you. Our chief correspondent for FX and rates in Asia, Ruth Carson. We have more ahead on the Asia trade. This is Bloomberg. Let's take a look at how commodities are faring. Of course, we have been seeing oil in the spotlight ahead of those US-Iran talks. And a bit of those concerns surrounding the tensions and direct military confrontation easing off a little. Overall, though, this week we have been seeing a pullback in metals, and along with that, miners have come under pressure, and also in the spotlight, these miners, because a potential deal to combine Rio Tinto and Glencore into the world's biggest mining company, well, that's collapsed, with talks going down to the wire, but ultimately falling short. For the details, let's bring in Australian equities reporter Kameli Agana in Sydney for us. So, Kameli, why did the talks between Rio Tinto and Glencore fall through?
Well, I think the main point to consider is that there was this disagreement that they just couldn't get over between Rio Tinto and Glencore regarding the premium that Rio would be paying to acquire Glencore's shares. Now, Rio is almost twice the size of Glencore in terms of market capitalization. But from our reporting, from Bloomberg News reporting, I understand that Glencore had been seeking a share exchange ratio of that would have given investors about 40% of the company. So it was really that disagreement about the premiums that caused that deal to fall through.
And this is not the first mega deal that's falling through in the mining sector, right? I mean, we have the likes of BHP and Anglo. What's going on?
Yeah, so I think it's quite difficult in general to do M&A in the mining sector. Now, I'm going to take it back a step and talk about why a lot of these companies have been pursuing these mergers. There's been a surge in demand for a lot of metals and commodities, which is sort of partly exemplified in the run-up in metals prices that we've seen in recent times. Both BHP and Rio Tinto sort of see copper as the way forward. But ultimately, it comes down to those synergies and whether shareholders on both sides can agree that a merger will create value in the long term for all parties. So it's quite difficult in the metals and mining sector in general.
And Kameli, this is coming at the time where Australian stocks overall have been seen as somewhat of a laggard when it comes to earnings growth. Any improvement expected?
Oh, for sure. I think there's definitely a high chance that we can see a turnaround in this upcoming earnings season going into February. Analysts have actually started to lift their forecasts and their expectations for growth for the index more generally. And it's been that mining sector that's been a key vehicle driving that earnings growth. A lot of that rally and a lot of those lifted expectations are linked to those price moves that we've seen in metals prices in recent months. Now, we did see a big sell-off at the start of this year in the metals market. That was a big story and a big focus for us, and that did impact mining shares a little bit. But in the long term, those earnings forecasts remain intact, especially for the likes of Rio, for BHP. So this earnings period in February is very key to watch if that growth does materialize.
Australia equities reporter Kameli Agana there. As we continue to follow the Asian markets, we are also seeing a little bit of downside pressure when it comes to Korean futures. You can see Samsung, SK Hynix, of course, pre-market downside after that massive sell-off that we continue to see in the U.S. around software makers, around the big tech giants, and really the AI spending capex coming from Amazon sinking that stock overnight as well. We do have other idiosyncratic exciting news. Local media reporting that Samsung will be expanding output capacity for DRAM using HBM4. So a little bit of realignment in the chip sector as well as memory chip pricing continues to rise. More ahead on the Asia trade. This is Bloomberg.
And here are some corporate stories we're tracking. Bloomberg has learned HSBC is preparing to hand some bankers little or no bonuses, adopting a more cutthroat stance to trim costs. Sources say the lender is encouraging underperforming staff to depart following the bonus payouts in the coming weeks. This will also include those at managing partner levels. The move aligns with CEO Georges Alderi's goal to bring HSBC more in line with pay practices at U.S. peers. Bloomberg has learned that Saudi Arabia's flag carrier Saudia is in early talks with Boeing and Airbus over what could be its largest aircraft order ever. Sources say the airline is weighing at least 150 narrow-body and wide-body jets at the kingdom as it invests billions to become a global tourism hub. The potential deal would replace older aircraft and expand Saudia's fleet. OpenAI rolling out a new platform called Frontier, designed to help companies deploy AI agents more easily. The company says Frontier aims to simplify how businesses roll out AI and accelerate adoption among corporate customers. The tool will also allow firms to integrate AI agents from rival firms, including Anthropic. And here are some of the stocks to watch when trade opens in Korea and Japan shortly. Tech will be in focus amid the heavy selling in the U.S. On our radar, Samsung, SK Hynix, Tokyo Electron as well. This is Bloomberg.
This is the Asia trade. We're counting down to Asia's major market opens after another session of losses for tech in the U.S. It's really all about the fears around AI spending, right, Avril? Because we continue to see Amazon sinking after that capex really surpassed expectations. And of course, new AI tools really not helping those disruption fears.
Yeah, you're alluding there to what we heard from Anthropic. And it seems also that among tech investors, they're just finding reasons to sell stock, Shery.
Yeah, and here over in Japan, it also doesn't help that we have political uncertainty because we are going into elections on February 8th. That's Sunday. Voters headed to the polls, and right now the expectation for the ruling LDP to win comfortably. But of course, it's really about the fiscal picture for this country as well that's at stake because politicians now continuing to promise more tax cuts, which could lead to more debt burden for this country. Still, when it came to JGBs in the previous session, we actually saw them rising after a solid 30-year auction. So that calmed market sentiment a little bit. The Japanese yen holding at that 156 level, but we're getting closer and closer to that 160 level against the U.S. dollar, which some have seen as those levels that authorities watch before intervening in the markets. And you can see the Nikkei and the topics now losing ground. We have had a little bit more negative sentiment coming from the earnings season as well. We do have Toyota and SoftBank also, and Tokyo Electron actually are reporting later today. Take a look at how South Korea is also coming online. We had heard from sources that the country sold $3 billion of dollar bonds in order to bolster their foreign exchange reserves. We continue to contend with the tech sell-off in that market as well. We saw, though, current account and goods surplus widening in the month of December. Data just out this morning, the Korean won continuing to weaken against the U.S. dollar, despite, of course, authorities trying to really bolster the currency there. But, Avril, it seems to be the broader anxiety over what's happening in broader global markets as well, especially when you take a look, of course, we mentioned the fears around disruption around AI tools, but also at the same time, we had been underpinned by U.S. economic strength. Take a look at this chart because we continue now to see perhaps more signs of a fragile job market in the U.S. Job openings unexpectedly falling in December to the lowest since 2020, layoffs edging up, U.S. companies announcing the largest number of job cuts for any January since 2009, jobless claims rising more than expected. So if we were thinking that really we could see some hope and strength in the U.S. economy, there seems to be a little bit more skepticism and perhaps some fears that this could falter.
Yeah, absolutely. And all this is compounding the concerns about AI valuations at a time where the U.S. labor market does look indeed to be worsening. And that actually drove that pickup in the short end, especially when it comes to U.S. Treasuries, yields coming down. You're looking at the handle on the 2-year now sitting below 3.43. 10-year hovering around the 4.16 handle at a time where the tech rout looks poised to extend based on what we're seeing in U.S. futures. And not forgetting, we saw bits of that valuation rotation underway earlier in the week, but overnight, small caps value, they still got hit. So it looks like the broadening out of that sell-off in U.S. markets. And given the selling, the skittishness, the uncertainty, unsurprising to see the way in which cryptocurrencies have reacted as well. We talked to some of our colleagues earlier about this capitulation, and despite being already at oversold levels, it looks a bit difficult to see where the selling can end. You're looking at Bitcoin extending those declines more further away from the 65,000 handle, pretty much erasing all the gains since Trump came to power for a second time. Crypto investors have had to reassess their assumptions about how much support the sector is really going to see from the Trump administration. But also worth noting, this is a matter of risk off when it comes to turning tail and taking a second look away from these riskier corners of the market. But of course, Shery, as we look to the debt concerns globally, the focus is also going to be on Japan.
Yeah, especially with the Sunday lower house elections here. Latest polls from Mainichi, Nikkei, and Asahi all projecting a big win for Prime Minister Takaichi, predicting that her ruling coalition could end up with 300 seats or more, up from the current 233. Let's get more perspective on the impact on markets. Ria Nishihara is Chief Japan Equity Strategist at JPMorgan Securities. Ria, always good to have you with us. I mean, we have seen this Takaichi trade sort of gain momentum, right? Sell yen, sell JGBs, but stock markets actually gaining ground. How much could differ depending on the outcome of the elections?
Yes, I think as you noted that the local media outlets said that LDP is gaining momentum and LDP will likely to have more big win. With LDP seats above 243, this is stable majority, we can say that big win. So we saw the Nikkei could react at like 55, 54, 55, 56 to 56. And with very strong result, LDP seats would be 261. This will be absolute stable majority, or even 280, which means that coalition parties will have 2/3 of the seats of lower house. This is very, very strong for support for current administrations. In those cases, Nikkei reaction would be over to 56,000. So even if LDP seats were just above majority, 233 seats, Nikkei's level would be flat or a bit slightly positive, up from a current level. Conversely, I think the probability is very low, but if LDP or coalition party miss minority, the Nikkei could branch 51K. But for all of that scenario, because of the good corporate earnings growth and corporate reforms, I believe to year-end, Nikkei will head for 56 to 60K or over 60K level.
So basically, no matter how this election actually unfolds, you're still expecting some upside in Japanese equities. At what point does the weakness of the Japanese yen hurt stocks?
Yes. So, of course, I mean, as I said, corporate earnings and corporate reform will be the driving factor of the good equity market. But as you say, yen weakening and rising rate are, of course, a risk for equity markets too.
Especially if it's rapid depreciation, right. It's something that really policymakers don't want to see, right?
Yes. So in our calculations at year end, dollar yen at 165 could be a break-even point in terms of the that is a level where real income growth. This is a very important policy under Takaichi administrations. That should be difficult given that current CPI consensus in the market. So that is 165 is a red line at the year-end level. But we had a rate check by the MOF, and there is an alert for currency intervention in the market. So such alert should a bit slow down that speculation or the market challenge to the yen weakening, I think, regardless of the result of the election.
So what's your base assumption for the yen year end?
Yes, our house view is 164, just below this 165 level. But OIS markets now price in 154 year end. Yes.
You talked a bit about the assumptions you have on the yen and how that maybe could be a bit of a headwind, break-even levels. I wonder, what is your assessment of the risk from yet higher levels on rates, JGBs, given the ructions we saw earlier in the year and the spending plan that's coming through, potentially getting fresh impetus if she gets the strong mandate that's expected?
Yes, the consumption tax reduction is an issue, I think, post-election from a market perspective. And so that's why this is related with rising rates. So if we look back at that market situation back in January 20th, when JGB 10 years yields tested or reaches above 2.3% level. But things has changed. The Bank of Japan said they may consider the market operation to purchase JGB. One of the mega banks, SMBC, said they may think about purchasing JGB if 10 years yield will be above 2.5%. The purchasing size can be 10 trillion yen. And also local media say that corporate pension may do capital repatriation. This should be also 10 trillion yen size. So things has changed since January 20th. So of course, the larger that LDPs will be, the larger the pressure for rising rate. So there will be some pressure for rising rate, but I think the cases where the rising rate should be out of control from a perspective of policymakers is not our main scenario. I think 3% to JGB 10 years yield will be the break-even for equity markets developments.
And you spoke earlier also about some of these sectors or the specific levels that we could see on the Nikkei by the end of the year. I wonder, even with some of the election win tailwinds already being priced in, do you see specific sectors having more upside?
Yes, so because Takaichi Sanaenomics means capex investment in business. So that should be, and also yen depreciation pressure, if not large. So which should support external or cyclical or sectors and also financials because of yen weakening pressure will linger. The BOJ's rate hike paces can be faster. So those two are the top priority, top recommendation, and also domestic cyclicals can be also recommended because we believe that real income growth will happening in the first 3 months of this year.
How is Sanaenomics different from, say, Abenomics, and are there any lessons to take from that era?
Yeah, so the start of the market situation is very different. The Sanaenomics started with cheap yen and high inflation. So Sanaenomics try to start similarly with Abenomics. And then they see that yen weakening can be a constraint of the continuation of Sanaenomics, right? So I think especially since the early December or late November, addressing yen weakening is actually the top top priority of the administration. And then I'm sure 2 weeks ago, January 20th, the administration noticed that addressing rising yen will also as important, issues as administrations to challenge, to address. Yeah.
Ria Nishihara, always great to get your views. Thank you so much. Chief Japan Equity Strategist at JPMorgan Securities here with us as we head towards the Sunday Japanese elections. We're also watching the tech sector because some big moves among chip makers, chip equipment makers. We do have earnings out of Tokyo Electron later today. They could post a decline in third quarter sales due to low seasonal demand for chip making tools, according to Bloomberg Intelligence. But at the same time, you're seeing, of course, a broader tech sell-off. We had also heard from local media in South Korea that Samsung will also be expanding their output capacity for DRAM used in HBM4. So we are seeing a little bit of repositioning when it comes to these chip making configurations or fragments of the different markets in this sector. SK Hynix also down more than 6%. More ahead on the Asia trade. This is Bloomberg.
Thailand is heading into its third election in 7 years this weekend as its economy looks set to grow at the slowest pace in a decade. Let's get to Bangkok, where Bloomberg Insight anchor Haslinda Amin is standing by. Has, how significant is this election? What's at stake here?
Avril, it is significant. A lot is at stake. Remember, this is an economy that's gone from being the tiger economy to the sick man in Southeast Asia. Growth of 1 to 2%, which is the slowest pace in all of ASEAN. Household debt is among the highest in Asia at 90% to GDP. So a lot is at stake. It needs a government to drive it forward to reverse the course of its economy. And that's caused pretty much international investors to make an exit. They want more clarity. They want more stability. But looking at this election, although it is significant, it is unlikely to drive that change going forward. If you speak to analysts of Thailand, they say you can expect a hung parliament yet again. No one party is likely to garner enough seats to form a majority, to form a government. So expect a lot of political wrangling, a lot of horse trading, a lot of, behind the scenes negotiations. You can expect a coalition government that will, again, fail to instill confidence, fail to perhaps carry out the structural reforms that the economy badly needed. Case in point, and something that we want to focus on, is the Constitution. What's different this time round is that voters will also vote on whether or not they want to change in the Constitution, a charter that was put in place back in 2017. Remember that we've seen 20 constitutions in Thailand since the 1930s, and each charter was put in place after a military coup. Now, when it comes to the 2017 charter, people have pointed to the fact that it gives a lot of power to unelected constitutions, unelected institutions and people, and therein lies, the change that they want to see. They want the Senate removed from being able to choose the Prime Minister, for instance. So a lot at stake that could probably propel Thailand to the right path, but whether or not it is consequential, that remains to be seen.
So, Haslinda, what have been the policy platforms for the political parties?
Well, Shery, this election is more about the economy rather than the politics. And we've just talked about how leg-lost the economy has been. So it's not surprising that the political parties have been waiving a lot of subsidies, cash handouts. And when you take a look at what the Pheu Thai party, which is linked to former Prime Minister Thaksin Shinawatra, it's even offered 1 million baht to 9 people each day as a way to help them cope with the trials and tribulations of the high cost of living. So they've been pretty innovative in what they are coming forward in terms of the help they can provide to the people. Whether or not it's a ploy, whether or not this makes economic sense remains to be seen. Remember, this is a government that's been struggling with funding, with spending, and money needs to be channeled to perhaps AI-driven economies, to education, to help create more quality jobs. That remains to be seen whether or not it can work out. Of course, we have to see who remains in power, but the two parties contending with each other at this point in time are the Bumitai Party and also the People's Party. The People's Party, as you know, is an iteration of the Forward Party, which actually won the most votes at the last election, but was disqualified for what it was proposing, essentially the eradication of power of the military as well as the royal family.
Haas, how soon will we know the results?
Well, we'll know the results really soon. Elections, the polls will start at 8, it ends at 5, and within the next 5 hours, i.e. by 10 p.m. local time, we should have a sense of where the votes are headed, but it takes 45 days, Avril, for the court to actually certify the results. So it's going to be speedy. We will know soon enough.
Hasina Amin in Bangkok, Bloomberg Inside anchor with the latest on the elections coming up over the weekend. Other global headlines that we're following: the Cuban government says it's willing to negotiate with the U.S. as it prepares for acute fuel shortages due to increased pressure from Washington. President Trump last month cut off Cuba's fuel supply from Venezuela after the capture of Nicolás Maduro. He also threatened other countries with tariffs if they come to Cuba's aid with energy shipments. Bloomberg has learned that China is asking state firms to pause talks on new projects in Panama. It comes after the top Panamanian court voided C.K. Hutchison's contract to operate 2 ports along its strategic canal. Sources say China has also asked shipping companies to consider rerouting cargo through other ports.
Let's take a look at Europe assets as well. On a day where Asia markets are reeling from the tech rout overnight in the US that had broadened out, we are seeing Euro Stoxx 50 futures also pointing to that downside, but not forgetting markets in the UK as well amid some leadership drama. And in terms of the BOE, the meeting surprise in terms of showing that more officials than expected were in favor of an interest rate cut, and that left the pound reeling, although gilts picked up. We have more ahead on the Asia trade. This is Bloomberg. Amazon shares sliding in late trade after the company announced plans to spend $200 billion this year on AI-related infrastructure. You can see that really getting hard hit, almost 12% down. Let's get perspective from Bloomberg Intelligence Senior U.S. Retail Analyst Poonam Goyal. So Poonam, we have been seeing these tech giants, right, just announcing massive capital spending, and Amazon is, you know, maybe not an exception, but what does the cloud capacity and its profitability, is that an added, weak link when it comes to what's gotten investors so worried?
Yeah, so I think the worry is not so much that they're spending more to invest in AI, but it's will they be able to spend this, because there are supply constraints. You need more data centers to build this out. Do we have enough? Can they build? Can they all continue to build their capex with the current supply situation? That's the biggest concern. In terms of, just for AWS and its growth prospects, we're very confident that AWS can continue to generate strong top line and margin momentum. The backlog of 40% was very encouraging, and we are not doubtful on the prospects of AWS, but, can they execute with the limitations at hand today is the big question.
Yeah, especially with that heavy investment that you talk about in logistics, technology. How can they continue to expand their retail margins on the other hand?
So the retail margins, I think, are a play of twofold. One is efficiencies. As they integrate AI within the retail business, whether it's in the marketplace, the e-commerce platform, or in logistics, we're seeing efficiencies come to scale. Also, keep in mind the advertising business, which grew over 20% this quarter, is accretive to their margins. It's actually higher margins than the AWS business. And the biggest use of their advertising is still sponsored ads. So as they continue to generate dollars from advertising, they can help fuel growth on the retail side.
How much do you think Amazon can continue using ads as this key growth engine?
I think the ad growth is still far ahead of us. I don't think that we're going to see that stop or slow down anytime soon. You know, we're expecting the ad business to grow to over $100 billion in the next few years. And while there have been some speculation on, you know, what happens when things become more agentic or AI driven, does it pull back the ads when the agents get smarter and they're giving you 4 recommendations instead of 20? Does that mean that you don't need as many ads? We think for now you still need ads. We think that manufacturers and brands will continue to push product to customers in the form of ads, whether it's on the retail marketplace, whether it's within their personal assistants, or even on the media platforms.
Poonam Goyal from Bloomberg Intelligence on the latest from Amazon. And of course, those jitters around all of this AI spending is leading to other markets across Asia to also fall. Take a look at the Kospi because it's now losing more than 4%. At one point, it was losing more than 5%. We are talking about the big tech darlings like Samsung, SK Hynix taking a beating today. But put it into context because the Kospi has rallied so much in the past year. It's still up more than 90% year to date, despite this fall, Avril.
Yeah, and it's also the case of cryptos getting hard hit. If you take a look at how Bitcoin is faring, it is creeping ever closer to the 60K handle. And some of the other key cryptocurrencies are not spared either. This big decline you're seeing in Solana as well. This rout is representative of these Trump-era gains, certainly being erased at the time where investors are turning increasingly skittish on riskier corners of the market. More ahead on the Asia trade. This is Bloomberg.
If she is reelected, that means that there is a democratic will to support her continued stance on her policies. We don't expect that to change, and I think that is one of the main topics of this election, is that we are asking the Japanese people what they see as the most favorable diplomatic and foreign policy.
Arfiya, Japanese Parliamentary Vice Minister for Foreign Affairs, they're talking about the upcoming Japanese elections. Voters go to the polls on Sunday for a lower house election. That's a high-stakes gamble for Prime Minister Sanae Takaichi. She's seeking to shore up her coalition's majority in a vote set to have wide-ranging implications for markets and regional security.
国民の皆様、私は本日
Just 3 months into the job, Prime Minister Sanae Takaichi dissolved Japan's lower house, calling a fresh vote for February 8th. Coming from a string of election setbacks for the ruling Liberal Democratic Party, Takaichi is aiming to capitalize on high public support and increase her majority in the more powerful lower house. Some recent polls show an approval rating of more than 60%.
I think Takaichi is really in an extremely enviable position. I mean, her support rates have been consistently extremely high, and I think that's going to do quite a lot for her in this election.
A stronger mandate would make it easier for Takaichi to push through her agenda, including higher defense spending and the largest supplemental budget since the pandemic. But the road to victory might not be straightforward. The LDP's alliance with Komeito fractured last year, ending a 26-year political partnership. The realignment injects new uncertainty into Japan's electoral dynamics. Voters, though, are more focused on the cost of living. Inflation has stayed above the Bank of Japan's 2% target for more than 3 years, while wages lag and a weak yen pushes up import cost, giving a sense of falling living standards. To ease the pressure, Takaichi pledged to suspend the 8% sales tax on food for 2 years.
Maybe it's because of the weather, but the price of vegetables, some are just shocking, aren't they? Even things like snacks and chocolate, their prices haven't doubled yet, but they've suddenly gone up quite a bit. Same with rice.
I wish they stopped just talking about tax cuts or eliminating the consumption tax during the election season and actually put realistic measures into practice.
The stakes are high. An increased majority would give Takaichi a green light to pursue what supporters call a more assertive Japan, with higher defense spending and state-led investment. But a loss of seats would be a self-inflicted wound for the new prime minister, who has said she would step down as party leader if that happens. Even before ballots are cast, markets are reacting. The yen has wavered and the government bond yields have risen, reflecting investor unease over Japan's fiscal path.
Since October of last year, we have taken a very responsible approach to public finance, talking about responsible, sustainable, and proactive fiscal policies. We are not talking about expansionary fiscal policies. And this is demonstrated by some of the numbers that we see. So I asked the market participants to calm down.
Japanese stocks have already outperformed many of their peers as investors focus on the so-called Takaichi trade. Ariel Buzetto, Bloomberg, Tokyo.
Bloomberg opinion columnist Reidy thinks Prime Minister Takaichi has some similarities with U.S. President Donald Trump, especially when it comes to dealing with her opponents. Gearoid joins us now for more on his latest article. Gearoid, what are some of her qualities that make you say that?
Well, I do want to be a little bit careful in drawing the comparison here. President Trump is a maverick and obviously comes from, a very kind of radical place in politics. Takaichi isn't like that. And, there's a lot of things that separate them. But where they do have a similarity, I think, is in, as I wrote in the column, is how they drive their opponents. They drive their opponents crazy sometimes. Takaichi has, very unusually, I think, for a Japanese politician, this, reality distortion field. She bends reality to her and she drives all attention to her. And she has become the story, much as in the US, President Trump made the election, a choice between him and his opponent, and between Kamala Harris last time around. Similarly, we see Takaichi making this an election all about her, less about her policy platform, less about what she wants to do, and about a mandate for her and really a vote on her personally. And as I say, she despite her very high popularity ratings, she does have a lot of opponents, and that has been driving them a little bit crazy.
Gearoid, to your point, it's not every day that we see a Japanese politician achieving a sort of rock star status. What is your sense of, is there a way this could backfire on her?
I think right now, looking at all of the polls, it certainly doesn't look like it's going to backfire on Sunday. All of the polls show her at least achieving a majority with her coalition partner. It seems highly likely that she's going to achieve a majority just with the LDP. That would be a significant victory for her and would justify calling this election in the first place, for which, let's be honest, there wasn't a fantastic reason for her to call it, but she's managed to sidestep that. I guess where it could backfire for her is if she starts to think maybe she can do everything and she starts to tackle some of, some more grandiose plans and thinks that maybe she has more of a mandate than she might actually do. That's the only way I could see it backfiring for her right now.
Reidy, good to have you with us. Bloomberg opinion columnist there with, of course, some insight into the upcoming election here in Japan. Let's actually discuss what the vote could mean, not only for Japan, but perhaps for the global economy as well. Joining us now is Coulton, Chief Economist at Fitch Ratings, usually based in London, but here today in Tokyo. Great to have you with us. So let's start with Japan, because as Gearoid put it, it could really give Takaichi a stronger mandate. Bloomberg Economics thinks that this could even presidentialize Takaichi. What would that mean for the Japanese economy?
I think one thing we're focusing on is the potential for some easing in fiscal policy, which would give the economy a bit of a boost. The economy isn't growing that rapidly. You know, we're sort of 0.75% to 1 percentage point kind of range, so there's an issue there. But what's kind of more important at this point, I think, is that if you look at the Japanese economy's growth rate in nominal terms, this is a really big transformation we've seen in the last few years, because we've got back to positive inflation, which is obviously causing issues, some political concerns, but it's actually meaning that the economy looks kind of healthier in a broad sense. And I think that's easing some of the concerns about the potential fiscal dynamics.
Does that mean that you can grow your way out of this enormous debt that you could incur if they go ahead with all of these tax cuts that these politicians are promising?
Grow your way out of it's a little bit strong, but it means that what we're seeing is that the government debt to GDP ratio is going down, and even with a slightly wider deficit, that would probably continue to be the case. So I think that assuages some of the concerns on that side. Because
we have seen, of course, bond yields just rallying, and perhaps even comparisons with the UK's Liz Truss. Could that be an issue down the line?
I wonder if there's maybe some other things going on here, right? If you look at real interest rates in Japan now, they're really very low. In terms of the policy rate's 0.75, we've got inflation over 3%. It's been over 2% for 3 years, as you mentioned earlier. So we've got very deeply negative real policy rates. But I think the market in the last 6 to 12 months has come round to the view that actually we probably should be expecting inflation to settle at 2% for the next 5 years. So if you're thinking about where interest rates are going to be over the next 10 years, which is what you need to do to price the 10-year government bond yield, you know, that's kind of a sensible kind of number for it to be closer to where it is today. The other thing to bear in mind is that the Bank of Japan is shrinking its balance sheet really quickly. So if you factor in the redemptions, the bonds that they bought back 10, 12 years ago, which are now falling due, even though they are continuing to buy, the net change is really quite powerful. It's like -5.5% of GDP. That's actually more aggressive than the Fed or the Bank of England when they were doing QT at its peak. And I think that's what that's doing. It's putting more bonds back into the market, which the private sector has to absorb. So there's a kind of supply dynamic going on that may not have that much to do with the market's view of the fiscal picture.
Oh, Brian, this is Avril in Singapore. Just wondering as well, what do you see in terms of the possible political pressure and what that means for the BOJ in the first half of the year in terms of normalization?
I think what we're seeing, if you read the BOJ's latest statement, is that I think they're increasingly feeling that it is the right time to continue raising interest rates. I mean, they've got the tools to deal with inflation. I mean, inflation is unpopular, right, as your stories has just told us. So they've got the tools to deal with that. And we're now, I think, in a world where, you know, the deflation issues of the past, they've got over that. We've defeated that problem. So I think interest rates look to us as if they're going to go up 3 times this year. That's our baseline. I could see it going up faster than that. I mean, real policy rates are very low at the moment. You know, that could be a factor in the recent weakness of the yen. So, you know, the weakness of the yen is not particularly popular with a lot of households as well, from what I can understand being here in Japan for a couple of days. So I think rate hikes, you know, is the right tool, and I think that's what we're going to see.
So unpopular among households. What are you seeing in business sentiment in Japan so far?
Well, you know, the weakness of the yen has been so good for the Japanese exporters. Over the last few years, the profits of the Japanese corporate sector have been really, really strong, and we're seeing that translate into stronger business investment. It's also kind of indirectly helped the reflationary dynamic, because it's meant that companies have been in a position to grant higher wage increases. So although, you know, on the headline numbers at the moment, wages are not quite keeping up with headline CPI. If you look relative to sort of underlying trend in CPI, about 2%, wages are growing faster than that. And that's partly because firms have been prepared to grant those stronger wages. So we've got this sort of positive self-reinforcing dynamic. And that's why we're saying reflation looks increasingly entrenched in Japan.
Yeah, we're going to be watching the Shinto wage negotiations in the spring. But this fiscal largesse that we're seeing is not just here in Japan. We're talking about U.S., China, and perhaps really helping the world economy become more resilient. But at the same time, does that really up the risks?
Medium term, I think it does. And let's be clear, we're talking about the US and Japan here. But so far, I don't think we can talk about the Japan fiscal largesse in terms of the deficit has recently been quite small, actually. But if you look at the US and China, world's two biggest economies, they're both running a deficit 7-8% of GDP. Those are enormous numbers. If you translate that into dollars, both governments combined are borrowing $4 trillion a year. That's 4% of world GDP. So when we look back at 2025, everyone says, oh, the world economy held up much better than we all expected, given the tariff shock we have from the US. It's perhaps not that surprising when the world's two largest governments are injecting that much cash into their economy, spending 7-8% of GDP more than they receive in revenues. That's a big boost to aggregate demand. Now, government debt in China and in the US is going up pretty fast. So from a medium-term perspective, it's hard to say that looks sustainable. But is it going to suddenly stop this year? Probably not.
All of the concerns around this spending and this investment into artificial intelligence, will it really lead to the productivity boost that we're expecting? And what are the risks around that?
There's a lot of uncertainty about exactly how this translates, but it does look like this is one of these kind of inventions that is really going to make a big difference to the way everybody does business. So in the short term, the way it's boosting the economy, and this was a big factor in the surprising resilience of the US last year, is the capex itself is actually providing a strong source of demand growth, and that looks pretty likely set to continue. Right? We had the announcement from Google yesterday, Amazon now, they're going to spend even more than they were previously telling us. They were previously telling us they were going to spend a lot. So I think in 2026, probably 2027, we're still going to get that boost from AI. Most of the academic research on the sort of longer run benefits, does kind of come down on the idea that it probably will boost global growth by 0.25% to 0.5% a year. That's a pretty big number.
Ryan Coulton, really good to have you with us here in the Tokyo studio today. He's the chief economist at Fitch Ratings, usually based in London, Avril.
Yeah, Shery, aside from DMs, let's take a look at the emerging markets as well. Of course, we've been seeing the risk of also hitting emerging markets. And one that is in the spotlight is Indonesia's. Following not long after those MSCI concerns, we are since hearing how the rating outlook has been cut by Moody's for the country on the policy concerns. And we've gotten a response from the country's FSA that they will keep strengthening the financial sector resilience. Meantime, you are seeing overall that Indonesian assets have continued to reel. More ahead on the Asia trade. This is Bloomberg.
We're in the thick of earnings season here in Japan. We're watching Tokyo Electron and Toyota shares ahead of third quarter results out later today. Bloomberg Intelligence thinks the chip equipment maker could report a sales decline due to seasonal factors. Toyota, though, could raise its guidance after shaking off U.S. tariffs and regaining ground in China. Let's bring in senior stock reporter Hideyuki Sano. Hide, let's start with Tokyo Electron because it's really bucking the trend, especially around tech names that are continuing the sell-off from the U.S. session.
Good morning. Yes, as you mentioned, there's a seasonal factor, but overall, analysts have been upgrading earnings forecast for Tokyo Electron because the outlook for DRAM investment is brightening. We have been talking about a huge shortage of memories, especially high bandwidth memory. So generally speaking, analysts have been quite positive about Tokyo Electron. And the catch is that share prices have risen even faster than analysts have upgraded their target prices. So we are seeing a bit of an unusual situation where analysts' target price is almost the same as the current share prices of Tokyo Electron. So there's a risk, but at the moment, the investors seem to be sticking to hopes that Tokyo Electron will deliver very strong earnings.
What are you hearing about Toyota from analysts, Hide?
Right. Analysts have been becoming more bullish about Toyota, also because the worst of Trump tariffs seems to have passed. Now, of course, it's not like tariff has completely gone, but Toyota seems to be doing quite well. I mean, it retained its status as the world's largest car maker last year, and because of its strength in hybrid cars. And Toyota even seems to be gaining some ground even in China as well, where a lot of traditional car makers are facing very tough competition from EV makers such as BYD. So overall, the market is expecting the Toyota to revise up its earnings. I mean, Toyota has been known for making very conservative earnings, so it's not a total surprise that Toyota is doing this. But then again, there are worries about the tariffs and possibly slowdown in the US. So the market is slowly improving, but it may still take time for Toyota to recover to previous record profits.
And as we speak, Toyota is trending higher. Hide, thank you so much. Our Bloomberg Japan equities reporter, Hideyuki Sano. Other corporate stories we're tracking. Anthropic is releasing a new version of its AI model designed to perform financial research and other workplace tasks. The company says Cloud Opus 4.6 can scrutinize company data, regulatory filings, and market information to come up with detailed financial analysis. The launch has weighed on shares of some financial services firms, including FactSet and S&P Global. OpenAI is rolling out a new platform called Frontier, designed to help companies deploy AI agents more easily. The company says Frontier aims to simplify how businesses roll out AI and accelerate adoption among corporate customers. The tool will also allow firms to integrate AI agents from rival firms, including Anthropic. We have more ahead on the Asia trade. This is Bloomberg. We're counting down to the open of China markets. Let's bring in our China correspondent, Minmin Lo, for a preview. Minmin, what are you watching?
Hey, Avril, of course, the big story today overnight has been the heavy sell-off in the software stocks in the U.S., concerns over overextended capex spending from Amazon, so possibly going to translate into the Asia session as well. So these are the software stocks in China that we're watching: Tencent, Kingsoft, Kingdee. These are the closing prices yesterday. So possibly these may slide today. Something to watch as to how markets will open later. If you look at Hang Seng Futures and how it was trading just a couple of hours ago, it was down quite significantly. If you flip the board, it's down by 1.4%. So it doesn't really bode well for the market open later. We'll certainly be watching that. Of course, Hang Seng Tech, we've been on bear market watch for a while now. I believe we closed about 60 or so points away from 20% below the highest point back in the last quarter of last year. So we're watching 5,346 is the level to watch. Given the tech sell-off we saw saw in the US session, we might be in bear market by the end of the day. So something to keep an eye on. One sector that we're watching in particular is the food delivery sector, because Meituan has agreed to acquire Ding Dong, which is a Chinese fresh groceries delivery platform, for $700 million. So we'll be watching the stock because overnight it already had risen by about close to 3%. This will consolidate Meituan's market share in the sector. We'll see how it performs against some of its other rivals. And of course, last but not least, we have Mu Yuan Foods, China's major pork producer, debuting in Hong Kong today, a $1.4 billion listing. It's about 5 times oversubscribed. I spoke exclusively to the CFO yesterday. Watch out for that interview, which will play out after the gong ceremony. Shery. Yeah, Bloomberg China correspondent Mimi Lo there will be watching out for that conversation, as we're also watching those tech stocks across Asia. MSCI tech stocks down for a third consecutive session. Not surprising given that we continue to see the U.S. tech sell-off. And one market that's hit really hard, the Kospi. Take a look at that. South Korean stocks down more than 3.5%, really being led lower by those tech names. Samsung Electronics, SK Hynix down at least 4% each. And we're talking about foreign investors withdrawing a record $3.4 billion in the previous session. So there's a lot of fear around disruption in the tech space. Of course, new AI tools really not helping. And Amazon also sinking in the after-hour session, given their capex expectations topping Economist estimates. The Nikkei is also down 0.8%. We do have a couple of earnings coming up that you have to watch out for. Tokyo Electron, Toyota coming up. ASX 200 down about 2%. That's it from the Asia trade. The China show is next. This is Bloomberg.